With Bill Baruch. He's the president of Blue Line Futures. He's joining us this Tuesday morning. Bill, welcome. Thanks for sharing part of yours with us. We're off the highs from last week in, gasoline, RBOB. We were trading up around $4. The futures did. Now, the focus seems to be there for many. It's tied directly to the inflation pressures at the pump. And while this morning we're back down to $3.60, the national average for a gallon of gas is still holding at record highs and continues to add to those inflationary pressures.
Yeah, it's been a one-way train, but I mean, $4 obviously a little bit of resistance up there. I'm also looking across the board in crude oil, where the July contract, some of the closing highs, the failure highs back in March do align to bring some solid resistance around 112. And that's been a really tough one to kind of get through. Overall, though, I mean, we remain very bullish crude. I mean, we've come on your show for a year or two now. We're extremely bullish. I don't think this is done, but there's definitely going to be times where we see the market pause.
Well, I guess that was my next question here, because oftentimes we talk about how RBOB leads gasoline, leads the crude, or crude leading gasoline. But either way, those two are very closely tied, not necessarily tick for tick, but with the Goldmans and others calling for $6 a gallon right now. You mentioned crude's kind of lagging a little bit. It's still holding below those highs that we saw up around 130, that geopolitical Russia invasion of Ukraine tension, spike high that we saw. But I guess the question is RBOB telling us that we should expect those upper levels to be breached at some point?
I certainly do. I mean,
okay.
I'm positioned long, managing, downside risk, of course, but a position long on my futures trading I'm doing. I'm overweight energy stocks and the wealth management that I'm doing. Overall, though, they say gasoline leads into Memorial Weekend, and that's could get a little bit top. So, that's just historically speaking. This may not be historical times, relative to the past, but I think you want to be on the lookout for any pullbacks that break significant support. And look at last week. I mean, you had a big reversal in crude oil that actually held the 618 retracement to a T. And then we had the inventory data was big jump in refinery utilization, but you had also a really good draw in gasoline. So I mean, the demand is there, and I think I don't expect this to be the typical top Memorial Weekend. I think we can run into the summer a bit, especially as the EU pushes the gas on the Russian oil embargo.
Good point there in terms of the big driving weekend that we're talking about sometimes, or maybe this is a bit of a premium as we head into that, with refineries definitely pinched here and maxing out at this point, as you mentioned. Let's just take a quick look here. Crude oil. We looked at RBOB a minute ago and how, again, up and through that $4 level, it's into new highs. But here's a look on the daily time frame. As mentioned, crude's lagging behind that move. Here it is, 130 we saw, if you remember, back on the 7th of March, I think it was. And just taking a look at these two products together, here's what I was asking about. Crude in the purple line in this instance, it's kind of been lagging, unable to take out that 130 high. But this is what I was talking about, this run-up we've seen in RBOB into these record highs. Many are looking, Bill, to refineries for relief. Is there any in sight?
You know what? I increased positions in things like Phillips 66 about a month and a half, 2 months ago. And no, I mean, I hope these margins keep getting squeezed and these stocks run up. But yeah, I don't think I mean, there really isn't much of end in sight right now. I mean, you hear the White House talk about SPR release. Maybe they're going to release heating oil, diesel, and to relieve the market. But we could come to a point where you're seeing countries like Indonesia that do not want to export their homegrown crop. We could not export diesel. Who knows? I mean, so there's a lot of narratives that really could start hitting and be potentially more bullish. I don't think the SPR release by the White House is really helping. It's just maybe a little bit of a political help. But it's not going to help the market. If anything, it's going to be a bullish factor. Yeah,
Russia, a major bullish factor here at this point in terms of refineries as well. If you're talking about gasoline, let's talk a little bit about natural gas, because you've got a situation there where there's been very little relief for the most part. We talked about Europe trying to establish energy independence, the U.S. trying to assist in that process, but prices remain extremely elevated. This is one of the things Christine Lagarde talked about yesterday as she was commenting on moving from that negative or to neutral rate environment into positive. I mean, this is a factor, a headwind, something to consider on both sides, whether you're talking about inflation or potentially creating a scenario that she's making a mistake here and central bankers are moving a little bit too aggressively with this energy crisis.
I gotta be honest. I 100% expect to see $10 natural gas.
Okay.
However, I'm watching it from a distance right now. I mean, the market has some wild swings, and it's a real tough one to really manage. But we've played it a couple times this year, and I do think we'll see $10 gas. I mean, I think it's like you talked about. Conditions are really tight. The physical market is extremely tight right now, and we're going to see. I mean, people are talking about spreads on selling the Dutch product and buying the U.S. product, and I mean that's kind of scares me a little bit to kind of talk about the risk control and something like that. But I do expect natural gas to continue to find a path of least resistance higher overall. Though there's going to be days where this thing's down $1. So I mean, if you're trading it, you need to know what your risk management strategy is on something like that. And for me right now, I mean, I just feel like if volatility is pretty high, options are pretty expensive. But if I can find something in there that gives me upside exposure, I usually try to take it.
Bill, I think those are words of wisdom here in terms of that. Well, you're speaking to the intraday volatility. I mean, as I look at it yesterday, we're talking about more than $1 worth of range, 785 up to 882. Okay, just shy of $1 worth of range. Now that I look at it, 785 up to 882. But as we're nearing this $9 level, we always talk about how things get a little squirrely as you near the highs and the lows, but especially the highs. Take a look, though, as you can see, you're calling for the $10 level. You can see, well, at one point, I remember natural gas back in 2005 up around $15. The end of the year it was, beginning of 2006. So still, again, kind of in the middle of the range where we have been historically. I remember where they were talking about kind of burning it off and basically giving it away as it was near these historic lower levels, if you remember. Let's talk a little bit about the influence China has on all this, whether you're talking about the demand side or the, well, on a positive note, if things were to recover, or demand side on a negative note, if COVID lockdowns were to remain.
Yeah, no, this is the topic I'm really focused on right now. I mean,
okay.
China's coming out of lockdowns, but they're going to do it advantageously for themselves. I mean, Shanghai slowly reducing curbs, but now you got Beijing with an uptick in virus. Are they going to start curbing Beijing? And you know what? I mean, right now we're in a Cold War. Let's be honest. And China's what they're doing is pressuring the West with inflation, supply chain bottlenecks, and it's advantageous for them right now. And even last night they did do some stimulus measures, but overall it seemed underwhelming. They cut the 5-year mortgage rate Thursday, Friday. That's sort of underwhelming. They're not coming out necessarily and just doing anything quite yet. But what I'm really paying attention to, is what the currencies are doing. And the Chinese yuan has strengthened against the U.S. dollar since the Shanghai lockdowns are starting to kind of pull back a bit and reopening. And that's, I think, is extremely important. So what I'm watching and how can I trade it? U.S. dollar index, which does not have the Chinese yuan exposure, of course, but the U.S. dollar index has given you a little bit of a head and shoulders top. And my narrative for a while, I haven't tried being short the U.S. dollar index at all, but overall looking for it does top in the onset or early stages of a rate hike cycle. And the goalposts have continued to be moved a little bit. So I don't want to shift gears too much, but I think China is extremely important on this overall narrative. But you in the start of this conversation, you mentioned, or in your warm up, you mentioned Esther George, Kansas City Fed president, as well as Bostic, the Atlanta Fed president. George is a voter. Bostic is very influential. They're both talking about maybe 2% being the hike. Where they may pause. So June and July get 50 basis points, maybe a pause. If they don't move the goalposts anymore, all year they've been moving the goalposts. If we don't see those goalposts get moved, the dollar will top. And I do expect that to trade lower. Now, I think there's also other interesting trades here where the copper, you have China reopening right now. Copper has not broken the $4 level. The CME has also released micro coppers, which gives you an ability to really kind of build into a position, which I love. I've been using those. And there's a nice inverse head and shoulders on copper. You have an inverse head and shoulders on the 10-year futures. You also have an inverse head and shoulders on the Japanese yen, somewhat on gold. So all of these assets are really lining up as you get the head and shoulders top in the dollar. So I see a lot of opportunity here. Now, this move has played out quite a bit here over just the last 3 or 4 days. And it obviously aligned with China, announcing the Shanghai reopening. So you don't want to start chasing things. We're actually running into a bit of resistance right now. But this could be a sustained move higher, and the commodities or the yen or the 10-year futures. But what it would be is a move in the U.S. dollar index down to about 101. So another 1%. Now, Fed Chair Powell does talk today. I think it's around noon or so. Pay attention to what he says. If he reiterates what Esther George says, what Atlanta Fed President Bostic had said, then we could see the dollar sell off. We could see rates come in pretty sharply. The 10-year futures rally, and you get a move in commodities, get a rebound in stocks, and just I'll finish up here with stocks. This Snapchat move, I just think was very poorly orchestrated. The way they announced this at 5 Eastern time, 4 Central, really no liquidity. We're dealing in a market where algos are really taking advantage of things. I think they did that because they knew it was bad news for them. This was discounted in things like Alphabet and Facebook and Netflix already. They did this so they could take down other markets with it. I think it was very poorly orchestrated, and so I just think unsavory overall. Interesting.
Lots to dive into here, Bill. We appreciate you joining us here to help us do just that, talking commodities across the board here into some of what's been playing out here as far as that overnight activity with stocks, individual names here. Bill Baruch, President of Blue Line Futures, always a pleasure.